Integrated Revenue Planning webinar. See that we do have attendees logging in as we speak, and we will get things started here now. Of course, this will be available afterwards and is being recorded. So as people are logging in, all the information will be available afterwards, but just wanted to get things started here promptly. I am Mike Mooney. I manage business development at Carlson Management Consulting. Many of you, of course, have received an invitation from me to attend today, and I'd like to thank everyone for signing up and joining us for the webinar. Greatly appreciated. We have a lot of great content for SaaS finance professionals. But before we do get things started, I'd like to let everyone know that we will have a question and answer session at the end of the webinar today. If you do have any questions during the presentation, please note the Q&A section at the bottom of your Zoom meeting screen. Feel free to enter any and all questions there during the presentation, and I'll be certain that they are covered during the Q&A session. I will also note, as I did previously, the webinar is being recorded, and it will be sent to all of the attendees today. Also, if you have any colleagues who you think would benefit from the session, feel free to forward it along to them. My contact information will be available at the end of the webinar if you have any follow-up questions or would like a personalized demo. And as far as today's agenda is concerned, we will cover, of course, introductions, an overview of Carlson Management Consulting, what we are seeing as major SaaS revenue components, integrations and automations, elimination of silos between finance, accounting, and sales, and for the grand finale, which will showcase the Carlson ecosystem and demo. And to wrap everything up, as mentioned, we will have a Q&A session to address all of your questions. As we do have a large number of attendees, if in the instance we do not get to your questions, I will follow up with you directly with an answer. For today's webinar, we are joined by our CEO and founder, Ethan Carlson, who will be leading the discussion, and Peter MacIntyre, who is our director of DataBlend. Ethan Carlson, of course, is a founder of Carlson Management Consulting, started in 2010. Prior to starting the firm, he was a CFO for a Boston-based consulting firm where he discovered and implemented adaptive insights. And as customer 335, he's considered a early adopter of the system. Soon after implementing adaptive, Ethan started Carlson Management Consulting and started working with companies throughout the Boston and New England area, and it has quickly grown a one-man firm to a 40-person organization with consultants coast to coast and overseeing over 350 implementations and optimizations of adaptive insights. With experience rooted in budgeting and forecasting, Ethan determined at the very core of Carlson's organization, the focus of the firm would be a customer-centric approach led by financial best practices combined with systems expertise. Ethan approaches each implementation with the same dedication and care he does to his own company. And for this, he has been recognized as a thought leader. He is a member of the steering committee for the CFO Leadership Council, Boston chapter, and is also an honoree of the Boston Business Journal's 40 Under 40. Peter MacIntyre has been a key member of the Carlson team since 2011. He is a certified adaptive insights consultant and heads up our efforts as the director of our integration solution, DataBlend, having worked on more than 100 successful implementations and integrations. Peter's work experience started in his formative years with his family-owned business in Vermont. He combines a holistic understanding of business operations with exceptional finance talent. Peter enjoys working closely with clients to understand business challenges and priorities. He is a well-rounded adaptive insights solution implementer with an expertise in integrations with adaptive insights, Salesforce, Sage Intacct, Workday, Epicor, QuickBooks, and Oracle NetSuite, just to name a few. With his experience, Peter has cultivated strong financial modeling skills, including forecasting, budgeting, and planning, and what-if scenarios, as well as providing your adaptive insights with the ability to actively plan with automated integration capabilities across multiple platforms. Initially founded in 2010, Carlson's foundation lies in our adaptive insights practice, but has since expanded our offerings across a multitude of best-in-class cloud financial solutions, including Sage Intacct for enterprise resource planning, DataBlend, our integration platform as a service, as well as Nexonia for timesheets and expense reporting, Avalara, a tax automation solution, as well as our outsourced service and services to organizations of all sizes and industries. Carlson is a 6-time top partner award winner with Adaptive Insights, most recently earning the recognition of Partner of the Region for the Americas. We've also been ranked 3 years in a row on the Inc. 5000 list of fastest growing private companies, as well as 4 years in a row on the Boston Business Journal Fast 50. I only mention these recognitions, of course, as they are truly an indication of our customer success, as our reputation is truly determined by each successful implementation. We have 4 offices located in Massachusetts, Vermont, Maine, and Ohio, with a team of consultants nationwide. And what separates us from the crowd is that each consultant, much like Ethan, comes to our organization with a finance background, as well as a deep technological expertise, making Carlson the cloud financial solution expert. And prior to handing it off to Ethan, I wanted, of course, to provide everyone on the webinar a cross-section of recent customers. And as you can see here, we work with a wide variety of companies at varying stages. And prior to, of course, handing it off to Ethan, just wanted to, mention that, as far as the companies that we do work with, whether you are a quickly growing organization or, that's at its infancy, or you have gone public and you're looking to automate, otherwise manual process, Carlson has worked with companies at all stages, and our highly experienced team employs a proven implementation methodology to transform key finance activities, allowing for our customers to benefit from improved insights and decision-making by leveraging the value of quality, real-time data for forward-focused planning and business intelligence. Without further ado, I'd like to hand it off to Ethan.
Great, thank you. Thanks, Mike. As Mike said, my name's Ethan Carlson. I'm the CEO and founder of Carlson Management Consulting, and I'm excited to be here to talk today about really revenue forecasting and how to make it a more comprehensive, as well as a more meaningful process for your organization as you go through this process. As Mike mentioned, we've worked with hundreds of organizations finding ways to make their forecasting processes more efficient, and particularly as it relates to software and software as a services businesses. Everyone has to forecast an entire P&L, operating expenses, revenues. And what we found is that most organizations at this point have a pretty dialed in approach to forecasting operating expenses. And it really is the revenue side where the complexities of their business lies. It also is where, they get the most scrutiny from a valuation perspective, as you talk about differences between GAAP revenue and recurring revenue, and what are really the key factors. And I think that's what really makes, working with, technology companies, which is one of our favorite verticals, the most interesting. And what I think we're going to go through today, we've kind of framed this as integrated revenue planning. And I think the idea is working towards creating a framework where all of your systems are working together, and that you have a overarching architecture of how you're approaching forecasting to really recognize the components and then leverage that to your business. I will say that in working across all the different companies we work with, everyone's business model has slight nuances. So you're going to have, what we're going to be showing in some of the demonstrations today are going to be, examples, and we'll have to tweak that. When looking at SaaS revenue from our perspective, I think the first, some of this is fairly obvious, but what makes, the SaaS model and the recurring revenue model so exciting is that you create multiple streams of revenue. Most everyone has multiple products, but also your revenue models are not as simple as how many units of a product are you selling today, and what does that translate into revenue for this month or this quarter. You have to look at not only the components of new deals, which we will definitely look at how you factor that into your forecasting, but how do you treat existing customers, and how are they factored into your forecast from renewals and from a churn perspective and upsell, as well as other factors that influence revenue modeling and related costs. We think that it's important to kind of take each of these components individually. And if you do this and you kind of look at the different frameworks from, be it top-down revenue modeling to really detailed bottoms-up forecasts, if you take that approach through each stream, you can really work towards a more comprehensive revenue forecast. Starting with new deal forecasting, we like to think about when we work with our organizations, that you have levels of granularity. Working from the highest level, think of that as top-down planning, really being the level 3 here on the slide, where we're talking about product line targets. This could be other types of examples of top-down planning, whether they may be a price times quantity model for growth, or a sales representative productivity model. But these are really inputs. It can be a finance-driven exercise. What we've found the most effective organizations, and I will demonstrate this, leveraging the Adaptive Insights platform, is organizations that take all, both types, this high-level top-down forecasting, and then compare that against their bottoms-up. So the customer-level detail. Now, this will vary depending on the type of organization you are and the type of contracts you have. But that granular detail, most organizations, have this in, maybe it's Salesforce or their CRM system. So if you can, leverage that source data and integrate that into your financial planning process, where you have your top-down modeling, as well as this bottoms-up, contract and pipeline data feeding in an automated fashion, you're able to get to a much more meaningful forecast. We always do look to find ways to then layer in finance team adjustments and produce a forecast. But we've definitely found that this combination of the top-down and bottoms-up forecasting for new business is a great way to go. And again, we'll demonstrate this in the platform today. Just as an example, you might do something as simple as a top-down modeling, where you're putting in contract bookings and having that cascade down, as an example of new revenue and how that flows. Typically, where models get more interesting, in a SaaS model, is the recurring side and looking at existing business. We have organizations, and again, you have to look and understand what is the most appropriate for you. Where again, the more granular run rate type, more high level run rate type of analysis, where they're just simply rolling forward at a top level, maybe factoring in some churn, works just fine. But again, if you're able to leverage some of that data that would be in your Salesforce CRM system or other base system, maybe you leverage NetSuite or Sage Intacct for your revenue recognition schedules of existing customers. If you're able to pull that into your forecasting by contract, by customer, and again, leverage that detailed data, so you're not having to do multiple sets of data entry, but are able to get that information in. It is very, very effective. Just going to pause quickly, an audio check. Are you hearing me okay, Mike? Or on the line, or is...
No, we are hearing you just fine, Ethan.
Okay, just wanted to make sure. I heard a little bit of feedback for a second, so just wanted to make sure.
No,
all right, we'll keep going. So like I was saying, and in our perspective, the whole idea is that we can create, and we'll show you where you can have these driver-based models combined with deep detail. And I think if we flip to the next slide, I have a screenshot. It is an idea where you can be leveraging in customer-based detail, contract start dates, and other information, and have that really produce your forecast. I think where organizations start to don't follow through with this or find it to be a challenge is that if you have to take these lists and take them out of the original system and load them in a manual fashion, or key them in, or maintain them in an Excel spreadsheet, it's really a very unwieldy process. And as part of the presentation we're going to show today, Mike mentioned having Peter MacIntyre, our head of DataBlend, on the line, and he's going to showcase really loading opportunity data from Salesforce and showing how push button or scheduled integration that can be inside your financial model. So really, there's no real reason to not incorporate in this low line item detail if it can improve your forecasting capability. Now, the next factor from our perspective that we think is really important is how are you forecasting on the existing customer base churn and upsell. What's happening? I mean, everyone wants a recurring revenue business model, or with that stream of revenue, because it creates predictability. But the reality is, customers do come and go, and the same idea again applies. We feel that a blended approach that layers in, again, the high level global assumed rates across your business for churn, but give you an opportunity to maybe come in and for large deals, or when specific things are happening, have deal-specific churn and upsell assumptions in your model. Really help you get to a more accurate projection of both, that ongoing recurring revenue stream, as well as how much is churning as you carry forward. And just as an example, looking at this, and again, we'll look at this in the system live, but the idea is that you could have specific rates by customer as an input, or pulled in from a CRM system. Again, if you've made your model truly integrated and is pulling a lot of this information from source systems, you're not creating a tremendous amount of data entry, and really you're focusing in, if you remember from the slides, it's source data plus finance adjustments, and so you're focusing in on those finance adjustments, not entering all of the data every step of the way. Other key factors, we think it's important to incorporate all other components that tie in with revenue, be it if you have a professional service. We're talking purely just so far about software revenue. If you have professional services revenue or other revenue streams or things of that nature, work those into the model as well. But also on the expense side, if you've got sales commissions, working a sales commission model into your financial forecast tied to revenue and how that flows. If you've got hosting fees, maybe that step up as you add certain numbers of customers, have that factored in and driver based. We've also seen organizations do a really good job of creating demand-driven headcount models, so that as they add certain numbers of customers, have it automatically ratchet up the levels of support, staff, and other resources that they needed to support their business. So I think that again, really working on creating a integrated model, leveraging all of your source systems, as well as something that is heavily driver based, is really the recipe for success. I think we've spoken about this already. I think we see a key element of being successful with creating an integrated revenue platform is leveraging your source system. If you have Salesforce, if you have Intact, if you are using NetSuite, whatever it may be, having a solution. We're going to showcase our DataBlend solution and integrating data into Adaptive Insights. But having it so that source system data, really only comes from one source. But and I think we often talk about this in the concept of creating a single source of the truth, or having a system of record. But it's almost you could almost think about it as trying to make every system you have the same data. So every system is the source system of record. And the way that sort of starts to work as we see it in integrated revenue planning, if you perhaps your accounting team, you want to eliminate silos between sales and accounting. Well, accounting is in their GL system every day. And here's a screenshot of a Sage Intact dashboard. And these are all revenue related, customer related metrics, which would be feeding in from Salesforce. So it's the Salesforce data, that's the point of entry. No additional adjustments, but whomever the user, if you were a salesperson, you might be in Salesforce looking at this data. Here, you have a finance resource looking at that same data in the system that they're comfortable with, and it's that creating that integrated, holistic view of your business that really we think helps drive those silos away. And taking it perhaps a step further is the idea of then leveraging in, and I'll show this in the demo, and I think it'll fit the screen more effectively. But the idea of having KPIs and all of your operational and finance metrics working together with the finance and operational data points that let you have that true picture of your business to analyze what's driving the success as well as the results together. And that's somewhat we'll showcase. Mike mentioned talking a little bit about the Carlson ecosystem. And this is a slide I like to include when we're talking about creating really a holistic view of your business, or integrated revenue planning. And we try and practice what we preach and what we help organizations with. And this is a quick snapshot of how we run the business at Carlson. Lots changed from when I started the company in 2010, and we're a mid-size organization with all the challenges that a lot of you face, and we have a lot of cloud-based systems. We've fully adopted that vision of best-in-class solutions, and as a result, we only want to enter our data once. So we run a lot of integrations, and we look to leverage adaptive insights. We use it for all of our budgeting and forecasting. We use it actually for a lot of our project management as well as financial forecasting reporting. But we're not entering data in there for sales. Salesforce is our CRM. We have a sales team and marketing team that meets on a regular basis, updates their pipelines. That information automatically flows every night into our adaptive insights data, similar to what you'll see in the demonstration that Peter will do. Likewise, we do all of our accounting, AR, billing, financial management in Intact, but all our time and expense is in Nexonia for various reasons. It's better UI for us. That all integrates, and then all our financial data also integrates from Intact into Adaptive. So really, Adaptive Insights becomes our single hub for all of our decision making, and I think that really that's the key. And that's our world. We're a professional services organization, but I think it's relevant in whatever your systems you have, be it Salesforce, Sage Intacct, NetSuite, Workday, whatever it may be. Finding a way to integrate that source data into a single place to create that planning platform is really a key piece of making integrated revenue planning successful. All right, so with that, let's shift over, and I want to show some of these concepts, and I think seeing it in action is really where it's a little more exciting, and shift over and show you this in Adaptive. All right. Okay. All right. So we I've just logged into a demo, and I guess I didn't share my screen. Sorry. You have to have at least one technical difficulty in a webinar, so that's all we've got. We're doing well. Hopefully you can all see my screen again. I've logged into Adaptive Insights, and what I really wanted to do was highlight some of the points that we were just making and how that starts to look in a model. But first off, if some of you are probably familiar with Adaptive Insights. Other than not, Adaptive Insights is cloud-based budgeting and forecasting solution. I think key thing is that this is a great solution for everything from financial statement creation to forecasting and other metrics. Just as a baseline, most organizations have some level of a full financial statement here, all the way down to operating expenses and net income. But what I really wanted to focus on today was, really the revenue and ARR side of things. If you're running a SaaS business, obviously everyone cares about your bottom line, but really it's what is your recurring revenue? Is it growing? How is that being maintained? So what we see most organizations have is, in addition to their financial statements, is some level of an ARR or an MRR, whatever your definition of recurring revenue, under contract. And you can see this is a very simple sheet. We have beginning ARR, we're adding in new, upsells, backing off churn to a net change to an end, and the end rolls forward to the next month and carries forward. And this is, again, simple concept, but what makes it interesting is how are we arriving here? And let's think about it as how I sort of broke it up before, right? It's really you separating out the new and the renewal, and then factoring in for churn and upsell. So if we focus in on the new and new ARR section, I think that the key area here, we can see we've got this plus new ARR line item for April. If we come down here to our model, you'll notice we have 3 line items driving new ARR method, and it's coming to a blend here at the bottom. Our 3 methods are, price times volume, a rep capacity, and a pipeline. And if you think back to my slides, these first 2 would be that level 3 high level modeling, top down, for another way to say it. So price times volume, rep capacity, these are going to be metric driven. Whereas line 17, this is a pipeline. This will be would be our integrated forecasting coming from Salesforce. Now, let's take a look at how this is being driven. But I think the first concept you can see here, we have these different models, and then we have our mix. So in each model, we've chosen to go 100% in any given ones, but you could, in our view, blend these. And we'll play around with this a little bit. So let's jump over, and I can just show you we've got our price times volume model. We can see we have just over 1.5 million. And if I the navigation would be right here just to price times volume, but I have that sheet available. And you can see we have 3 products available to us in this model. And these 3 products have, effectively a forecast. And you can see they've got some historical data. There's a place for add-ons. And you can see for product 1, we're projecting 21 units at this price. And there's the, 1.53. And then if we were to flip to product 2, we would see the balance of that 1.5 million. So let's go ahead and add some revenue and sales for, you can see there's the balance. Let's say product 3. We're going to go ahead and forecast some revenues for product 3. And these are top down. So you can see this is very simple modeling. Maybe we need, we think we're going to have 5 units a month. Go ahead and add that in. Once that's saved, we come back to our ARR under contract, we're going to see that method is going to change. And now I'm going to point out a couple of interesting things here. First of all, that changed, but you'll notice that my new ARR didn't. And that's because I have 100% weighting going to my rep capacity model. If I instead wanted to do a blended, we really like this concept where you can kind of triangulate in on a forecast. If we wanted to go to a 50-50 split, we can just do that and make an update. And now we will see an update to our, ARR roll forward. So you can see now that actually did have an impact. But now let's think about the whole concept what we're talking about here is integrated revenue planning. So this is all top down. And, maybe top down makes sense for May forward. I'm, in April 2017. So imagine we're somewhere in the past. I might have a little more information about my next month's forecast. So maybe I want to leverage my pipeline. So I have my pipeline database right here. So this is, again, just a tab. And this is sort of what Peter will demonstrate. You would feed directly from Salesforce. So let's take a look. Here's a deal for April. I only have one for 4 million. So how's that 4 million getting translated into 2.8? It's the 70% probability, which fed right in from Salesforce. And if we look at the row details, and we scroll over to time period, you can see that's exactly the translation that's happening. And it's also figuring out the MRR as well. So maybe we say, you know what, I'm doing my forecast, this is an integrated model. These aren't right for my current. I actually want to use my pipeline because I know that deal is going to close. And I just flip it up, make that update, and I've now sort of moved from a top-down modeling concept to something that's more bottoms up. And you can see that now flows through. All of that impacts my roll forwards. And creating that integrated modeling where you have that combination of top-down and bottoms up for new revenue, we think is really really how to get to more accurate forecasting, more dynamic forecasting. So that's quick look. We could look at the rep capacity model, but the concept is similar where you're looking at number of reps. You can ramp reps and factor in how that plays into new revenue calculations, based on how much they can produce. But I want to make sure we have enough time. We only have about 15 minutes remaining, so I want to make sure we save some time for questions and all the other things. So I want to move on to the renewal and upsell. So if we collapse the new revenue, we open up the renewal. We'll notice that we have our known renewal coming in from our customer database. So if we were to actually just go ahead and open up this tab, what you'll see is we have a customer database feeding in from our source system. So this could be Salesforce, this could be your wherever, but you've got all your different customers. You can add different dimensions, cohorts, whatever it may be. Having a contract close date, contract start and end date, and that total value. And what they're, are you using a default retention rate or an override, and what's the ARR, associated for that customer. So again, loading in this data, we think from a source system is a very important way to go. And if we go back to our main page, you see with this in April, we have 100,000 up for renewal. We're expecting 90 because we have a 10% default churn rate associated. If I change this to 20%, and I update my model, so again, that's the top-down modeling. What you'll see is that the that revenue goes to 80,000. Now we're also factoring in for upsell, at 5% after, so that actually is going to project 84,000. So that's why you see it, the net impact, up above. But again, leveraging our top-down modeling, we then maybe we go back and say, you know what, that's all fine. Let's find a row. This is if we got, certain ones, you can see we've taken this row. We've actually, this is to factor in a huge, big upside. They put a retention override of 400%, so they're going to quadruple the contract on that row. Or here, we know that this one's at default. Well, let's move this up to, the custom rate. And what that'll do is it'll override the retention, and, we'll see that factor through our renewal rates. So the idea of having these default, maybe a custom, maybe you have an input, all of that tying off of a top-down starting point that then rolls through. We found that sort of a nice combination of detail as well as factoring in for that for those assumptions and sort of top-level drivers. So that's sort of one thing. We've talked about doing top down and bottoms up revenue for new, and talk about renewal. One of the other really important things in my opinion is creating a view of your business that is holistic, so where you're seeing both financial metrics as well as operational metrics, and again looking to leverage a platform like Adaptive Insights to house all of that data. And we have a sheet in here. We like to create a work, like a KPIs worksheet, where you house all the information in one place. Now this is a lot of information, so but I think the first step in analysis is housing it. So think of this as sort of a one-stop shop for everything. You can see here it's got our new ARR, it's got new logos, which calculates off, it's got marketing leads, which are loaded into the database. What are sales call volumes? This would be loading from your CRM. How many sales reps are there? Other ARR calculations, financials, financial metrics, HR, headcount, support tickets. So you can really load everything. So the idea is, if I want to know anything about my business and on a trend where you're seeing historical actuals and forecasted values, I can simply come to this worksheet and analyze this data. Now, you finance folks, CFO, those, probably a lot of you on the phone, this looks great, right? You see numbers, we love to dive into numbers, but we found the organizations that do the best job is they bring in all of this data, and then what they do, and this is the discovery tab here, but I have it open, they actually then layer, visualization and charts and graphs over the top. So, here's the dashboard, quarterly business review. This tab is all about cost to customer acquisition, beyond, talking about ARR, cost to customers acquisition is usually the top, or customer lifetime value, or the top metrics that organizations speak of. So if you have that data that I was just showing as the backdrop of it, and then work it into charts and graphs, which that you can really easily view, or perhaps even switch into a presentation mode and flip through each chart and graph and say, oh, all right, well, here's my cost of customer acquisition. It's 264,000. That's sales and marketing over new logos, so per customer. So that's the cost in this model. How is it trending over time? All this thing, making it, pictures, much easier for people to typically consume. So we found the idea of creating these types of charts and graphs, perhaps they're, not charts and graphs, but just easier to consume metrics. We can see this is budget versus actual metrics, ARR, ending balance values, all, really a great way to go, as well as, finding ways to, have other views of, renewals or what have you. This idea of putting it all in one place, really integrating it, and then layering in visualization, we found is very, very effective. So with that, I'm going to pause and hand it over to Peter MacIntyre to show the integration, and then I'll wrap us back up and take questions.
All right, so I will grab the screen from you, Ethan. And so what I'm going to show here is, as Ethan mentioned, basically an integration between Salesforce and Adaptive Insights. And, DataBlend being the integration platform that connects the two. So basically what I'm showing here is, a Salesforce instance with, a nice list of opportunities here. Opportunities typically is a common integration between Salesforce and Adaptive, but using DataBlend, we can connect really anything out of Salesforce into Adaptive, or even any other system. But opportunities being most common, I'll show that integration. So with this list here, I'll jump over to DataBlend. So within DataBlend, I have a workflow set up which pulls the data out of Salesforce and then pushes it into Adaptive. And within our workflow builder that you can see here, within the query builder, when you create a data source to connect to Salesforce, we have a query builder tab that allows you to pick and choose the fields you want to pull. As you can see over here on the right, I have a list of all these fields I'm pulling directly from Salesforce. I then have the ability to click the pencil to filter anything, rename columns, anything like that, to transform the data, as well as preview my data as I'm building my data source. We also have the ability to do sub-transformations if needed, things like field mappings and pivot tables, which then allow you to flip signs, concatenate items, things like that, just to format data as needed between the two systems. So I also have, in another tab here, I have an adaptive discovery model with just a few charts that, as you can see, not too exciting. Nothing, doesn't really show me much yet. So really, I need that Salesforce data over here to really show me something. So within my workflow, I am just going to execute this integration manually. We'll point out that these can be scheduled, as often as up to once a minute, or more often times, a daily integration makes sense. But also the ability to run these at any time, as I'm going to show here. So just by clicking execute workflow, I need to update my data source. Executing the workflow, I'll get notified that the workflow is sent to the server to execute. And right now it's going to run through all my processes, pulling the data from Salesforce that I chose, pushing it to adaptive. And then when I come back into discovery to refresh, I should see my charts magically update. So, pretty high level overview of how the two work. Obviously, this can get a little more complex as data needs to be sometimes, but a lot of different options with how these two systems can connect, as well as many other GL systems that we have out of the box connections for, and so on.
All right, great. Well, thank you, Peter. I think I think the key thing here is just, it's hard to demonstrate integrations, but I think that the idea here was that you can very easily, without a tremendous IT effort, connect a system like Salesforce and Adaptive and have an integrated revenue planning experience linked to your financial model and kind of backing up some of the information, I was showing. So to perhaps wrap up, I think the key thing is, you want to be able to get reporting out of the system. And, we have a lot of options for reporting in Adaptive. And, perhaps, one thing is, being able to look at, maybe a time period and, show, what account, maybe we want to look at our, our original MRR over a period of time. So by customer, it's going to show us what each customer was contributing. So sort of revenue waterfalls, very easy to calculate out by customer. We're also able to do this, customer by customer, and look at, based on a cohort. If you only want to look at, a certain period, what cohorts. This is the December cohort contributing to, the revenues. All very easy to do. And I think perhaps what's most telling with Adaptive is its ability to integrate with Office Connect. So Office Connect is an Excel add-in where we're able to create, the presentation elements of your reporting packages. And then, simply, let's say you're changing a time period, you simply can flash forward to a future time period, hit refresh, and all this data is going to, well, I think I needed to update my parameters here, sorry. And, the idea is that everything will link and update. So you can see the data, and it's all drag and drop. So all the reporting capabilities of the system, if you wanted to add in, maybe some KPIs, ARR, the ARR section we were showing before, if you just want to layer that into a report, it's very easy to drag and drop in and assign it and, refresh and pull back data. So you can see just like that, I'm able to add data, get it into Excel, make it charts and graphs like you're seeing here. We can have all these charts and graphs which you could be adding into your PowerPoint presentations and having linked, and have those, again, refresh in real time to your database as your data changes. So we found this to be a tremendously beneficial piece of the solution. So with that, I want to pause since we only have a few minutes left. I see there have been some questions, and try and answer those. So I saw a question about the idea we showed the the percentage and factoring that in versus upsell or churn. I agree. You could take a different approach. So everything we've shown is just an example. If you wanted to back forecast churn and upsell separately, you absolutely can do that. I also see a question. Can we talk a little bit about how you would measure customer lifetime value in Adaptive? I think that this is a great use of the system, and what we can do in Adaptive is leverage your Salesforce data to see what your customer purchases have been, and factor in that cost of customer acquisition. So getting to a net value, and then factor that against your renewal rates out for, say, 5 years or whatever the appropriate term is, relationship with your customers on average, and that can really help you get to that lifetime value or sort of payback period. And something we'd be more than happy to dive into, calculating, cost of customer acquisition, customer lifetime value. Those things are very important metrics and probably are worthy of a follow-up call or demonstration. Also see a question about, does Adaptive handle headcount and payroll in general? Do you identify specific employees? The answer is we can do it a number of ways. I can show on the screen really quickly. You have the idea in Adaptive of, we were focused on revenue today, but if you wanted to do, you can see this has this model has a whole worksheet around HR planning. And if you wanted to have a list of your roster, this is just one department, but if you wanted to have, your entire organization's headcount listed out, and person by person with salaries, pay rates, and have this calculate out their benefits and everything, you absolutely can do that. You also have the ability to create driver-based models where you could say, tied to number of, based on X number of customers, we need, I don't know, one support rep per 40 customers or whatever the metric is. So you can go both ways. You can create driver-based models as well as these bottoms-up models, which are really effective because behind the scenes, this is a very simple spreadsheet or spreadsheet look and feel. But what you'll see is it's doing all the payroll tax calculations behind the scenes, which can link to your financial statement. So very powerful. So, today was really focused around integrated revenue planning, but really what you want is integrated revenue planning with an integrated financial forecasting, including OPEX. So hopefully that answers your question. Are there, so are there more? I mean, Mike, could just open it up for questions if you've got any more.
Yes, at this time, if there are additional questions, we're happy to answer those here live. Also at the same time, if you'd like to dive deeper, kind of have a personalized demonstration for your company or yourself individually.
Yeah, and just one more question did just come in, and on the chat. And it was, will the software integrate smoothly with upcoming revenue recognition changes? Yeah, so 606 revenue recognition guidance is on everyone's mind in finance. The answer is yes. We certainly will be able to adjust all the calculations. I think the nice thing with Adaptive is version by version. So we didn't really talk about versioning, but the concept of multiple versions and scenarios in Adaptive are supported. So you very much could start to create versions and different copies of your forecast with different revenue recognition behaviors to address for the fact that you do need to report both books for some period of time. So that definitely, we would be happy to have a follow-up conversation. But yes, we certainly are planning to address this challenge. All right, well, we just needed a couple to get us going. Now we've got another question, and then we'll probably, unless a few more come in, we'll probably have to wrap up, and we're happy to follow up. The question came in for departmental planning. Can vendor and payables be integrated so you can plan by major vendors in a specific department? Absolutely. Again, we were demonstrating, the revenue side, but on an expense side, we can load, and same as Peter showed, integrating your customer and opportunity data from Salesforce. You can integrate your financials from your GL, including by vendor. level of detail from a GL detail report. And then you can then plan by that dimension would be the terminology in adaptive within departments. We see that a lot in IT departments, in marketing. All right, great. Well, thank you all. And Mike, I'll hand it back to you to kind of wrap up.
Fantastic. Thank you so much, Ethan, and thank you everyone for attending here today. As mentioned, if you would like to take a deeper dive, we're always happy to set that up. There are also additional resources available right at our website, carlsonmc.com. Of course, www.carlsonmc.com. Multitude of recorded videos, blogs, white papers, as well as social media via LinkedIn, Twitter. We're always happy to answer any and all questions. Ethan, if you might be able to put up that last slide, my contact information is certainly available for direct communication. And I do see that there are some other questions that might be coming in, and I do see some other individuals that might have wanted to have a conversation. So we will be certain to follow up with each one of you and send along the webinar here, the recorded webinar after today's session. So thanks again, and we appreciate your time, and have a wonderful day.